Welcome back to another hour, the best hour of your life, in which you set yourself up to make almost infinite money. I mean, dude, we've been crushing this. I mean, you look at the growth stock names, unbelievable rebound. I mean, even Tesla's still getting pretty decent play in after hours. Volume significant today. Significante. Very exciting. The SPY absolutely ripping. For those of you that didn't see, it crushed our targets. We talked 540 by summer. You think we was taking back Sunday, giving it to you that hard, man. Seriously, absolutely nailed it. They didn't want to listen. They weren't ready for it. They couldn't handle it. People on Twitter actually retweeted me and were like, "You're an idiot." That stream where we said, and so this is when SPY was trading. I want to say this was back in like end April, early May. We were trading like 500. Yeah. And everyone was in panic mode. And I was like, I said, dude, unpopular opinion, it's coming up. I just got this feeling. I got it in my loins. 540 by summer. I just felt it deep. And would you look at that? It's almost like we put a lot of time and effort into like figuring this stuff out and then like just giving it away for free so that people could just like make money instead of become institutionally impoverished by the country they live in. But I mean, it's whatever. I mean, we'll leave that there, but I don't need to go too into that. Let me get this still charty poo up here today. So we've got the VIX here looking a little doo-doo, but again, remember, range VIX is always bottom bound. That's where it should stay. It's these huge inflections that should be worrisome, but on the monthly chart here, we are looking pretty decent. But not to go too into that. So to give you guys a little roadmap of what we're going to get through today, we got a few updates. You saw some of the tickers tagged here. I mean, we gave you Tesla 140, so ripping, your green. Palantir, if you've been following, at least in Penny Boys, I know you've got that. We're both in on over 100%. So like you either got it and you're up 300% or you're up 100. Like, choose your choice. You're welcome. Snow, obviously, we've been loading the boat on that. That one's been very current, very recent. We've been very vocal about that. So we're going to talk those growth names. Shai's got some interesting news he wants to reveal on DigitalOcean that I think will hopefully inspire everyone. I mean, I was just talking about before we started that wish I had added a little more to those calls that we talked about on the stream, but you win some, you lose some, and we'll get to that in a minute. So let's talk Tesla here. I mean, look at this, man. We're getting some strength. This is the monthly. Let's go to the daily. I mean, we've been talking about this for how long? Just Tesla needs some volume, dude.
Yeah.
What are your thoughts right here, looking at just how the last couple of weeks have shaken out?
I mean, I mentioned this, like once the admin hangover or admin headwind is over, which was the shareholder meeting last week, like what's the next catalyst? The major 88 events on August 8th. Who knows what's going to be revealed? Robotaxi, autonomy, wireless superchargers, Optimus. Who knows what is going to be revealed? All we know is it's probably going to be a major catalyst. It's been a while since he had one of these, and it's never been, FSD has never been at this point of so close to being at commercially scalable part of their business where like this event can be like, whoa, this will be what Tesla's vision is like, because FSD is essentially there already. So now we can see, like, now that Elon's feeling even more confident that FSD will be at the point that he needs it to be, what's his vision for it? And listen, the QQQ has been up 20% this year almost, or 18%, which is wild. Not even 6 months in. I do think there might be some, like, not rotation, but like maybe some funds going away from like the Mac 5 names, excluding NVIDIA, towards maybe the lagger names who clearly have a moat, a competitive advantage in secular growth themes, like a Tesla. Tesla has been basing for years. It defended the 140 like a champ. The chart is coiling up to the point where it might have a gamma squeeze at 220, 230 real quick. Major cast event in 2 months. The ceiling is literally unlimited with what autonomy can be for the FSD technology, what their AI vision will be like. So like, I could see this name catching a bid, and we saw that today. It was a little red in the open, then shot up 2%, and it continued throughout the day with volume. Someone's accumulating, and it makes sense because this, I mentioned it, like Firesales on best of breed stocks are incredibly rare. We're in an era where we're getting that right now because the 10 year is really high. There's macro driven weakness. So like we're seeing the Teslas, the snowflakes, Palantirs, the MongoDBs, these like amazing growth companies on sale due to short-term macro-driven headwinds. So I'm not surprised that Tesla caught a bid, and I think we're kind of just beginning this new trend up towards that 220, 230 price range that's called out, that we're probably going to if I had to put my money on it, most likely hit before 8.8.
Dude, I don't know, man. You get to a certain point, it's like, guys, all of this stuff we've been talking about is like, it's not, don't trust me. Just use your eyes. It's materializing in front of you. Now, the question is, what are you going to do with that information, I think? And I think what the market is asking of us is like, dare you disavow me? Dare you argue with exactly what I should? Because that's the thing, is like, it doesn't think, feel, it just is. We watch what happens. We draw a conclusion based on what happens. We make an attempt to speculate where it will go, how it will function, and we make a bet.
Mm-hmm.
These bets are all playing off. And again, we talked about this a billion times with Tesla. That shareholder vote was a big deal because it's not just about the pay package and the next, because I imagine that's priced into the next couple of earnings statements. It's the ambitious and ideological future that has led so many millennials to Tesla in the first place, in my opinion. Wouldn't you say?
Yeah.
Like, what was in question? It's like this vision that we all feel like we've, kind of rallied and encircled our, I guess, all joined a part of. It's almost a community of sorts, of a system of belief, if you will, right? Like a lot of millennial investors, early Gen X investors, and even some boomers that are smart have jumped into this because they see a future, a bright future. And in the landscape of out of control inflation, a housing market that's unaffordable, and kind of honestly the revocation of the birthright that most people thought they were going to get when you graduate college, get a good job, start a family, buy a house. It's been stolen from you. And I think Tesla represents something powerful in that this is an opportunity for me to still have a future. You know what I'm saying? That's going a little deep into it, but
no, I mean, you're right. And also I love the saying, like, history never repeats itself. However, it rhymes all the time. Yeah. What does that mean in this example? NVIDIA at $150 billion market cap. Everyone said, okay, I think it's near their potential. Like, they're going to be a gaming chip company at the massive ceiling. There was a brief few, like, I was too young, unfortunately. I'm annoyed. I was, but not too young. I just didn't have the capital to make that bet. Where there's a minority of investors who believed in NVIDIA's vision of the digital economy. Like, it's not just going to be a gaming company. Like, it's going to be everything that's all new products the rest of the decade will need a GPU. Those people made a bet because they saw the 4D vision of like the ceiling on NVIDIA when the mass scale people doubted it or said, like, you guys are delusional, you guys are retail traders, cold, etc. Tesla is kind of going through, that's what I mean, the history rhymes. Tesla's going through what NVIDIA kind of went through back then. Around the same, like $500 billion market cap, everyone calls it an EV company. But there's a minority of people who believe it's an AI autonomy software type of company. And because of that, they're just using the EV industry or their specific cars as like a warm-up lap for them or a launching pod for this AI vision they have or autonomy vision. That's going to be wild sailing if that becomes true. Just think about it, like, Tesla won't be selling cars. They're going to be selling rides. Just think about that statement. That's all you have to think about. The ceiling is wildly just like unattainable. Like, you never know what the potential is if it goes from selling cars to selling rides, because everyone will be still using transportation. I don't know if it's going to be EV, if it's going to be the trucks, but I can promise you autonomy will be here to stay once it gets scalable, because people love to be as efficient with their lives. They want to get ready they want to text while being stuck in traffic. They want to do their makeup on the way to work to get ready for work, or they want to drink a coffee or whatever they want to do. Driving is a waste of time. Once autonomy solves that issue, it's going to scale like an insane amount. And the ceiling's going to be freaking wild because that's a software margin on Tesla. That's 60% plus gross margins in an EV company. Now, it's not an EV company anymore because you can't label it that with 60% margins and something as scalable as FSD. So that's what I'm saying. Like, people doubted NVIDIA back then. same kind of cyclical industry where Nvidia was suffering, gaming was not doing great back then, and people thought, that's their ceiling. EV is struggling right now, but EV is the future. I don't care how delusional you are. Like, that's the future. I know that energy grid crisis, etc. Fine. I think we'll solve that. But Tesla is one of those few companies like worth 500 bill. I can see them worth 3 trillion in less than 5 years. And that's wild at that kind of scale. So we've been very open. If you guys start DCAing, watch this trend line, continue adding as we hit it, be patient with this name. And that's why Os's cost base is like below 150, mine's in 160s, and like we're up. Like, we're not selling. This is just the beginning of this new leg that Tesla's going to be on, in our opinion.
Agreed, dude. And I mean, I did not make it's not millions, right? But I did make a rather sizable bet. I mean, the one portfolio that I swing trade with, I guess on this account, no, we're on the same page. The biggest ads I made were at 140, but my total cost basis is on this portfolio is 165.29. And then in my like retirement account, that one's still sub, I think, 120. But I've been holding that shit forever. But as far as the position that we've been building, we're right on pace together. I'm at 165.29. But in this one, I mean, to show a degree of confidence, I mean, I put of this portfolio, I have 24% of it in. I don't know if you can see that. Can you see that?
No, it blocks it off with your background. I think.
I mean, you can kind of see it, right? But like,
I could see a lot of digits.
But my point is, I put 24% of that swing portfolio, so I have about 15 grand in the trade. I mean, it's a sizable bet. And as you guys recall, if you've been following us since the beginning of the year, I mean, what we talked about is like fewer positions, more concentrated, higher conviction. Like, basically, I want to make a few trades, but more intelligent, larger, better trades. Hold on, we got to talk. So, Chris, first of all, he wants us to get a black guy in the mix. I like that. I told him we're thoroughly covering Middle Eastern and Eastern European between us both. I would love, because then, dude, we're all shades, baby. We hit it all. Love that.
Totally.
He also says that we're gonna get dude, Chris, you write it, baby. We need an intro. We don't have one. He says I'll literally do a song for the show. I love that.
Oh,
you're in, dude. I'm down. Fuck yeah.
That would be dope.
I love a theme song. You gotta have a theme song. And hopefully it's all paid for if you've been following these trades. Like, hopefully you bought a production studio because you've made so much money following the stream. That's awesome. But a great question was asked. I said we'd come back to it real quick by Mr. Frank here from the Twitter feed. Would you sell a partial NVIDIA or crowd position? I already think I know your answer on the crowd part, to add Tesla. If so, what percent of the position? I'll let Shai answer this, but I will also say this. Like, look, dude, this is all relative. Like, his percent of the position based on the scope of his investing strategy will be very different from yours, unless you were just modeling after his, in which it would be the same. But yeah, go ahead.
Well, it just depends on when you got into both those names, in NVIDIA or CrowdStrike. Did you get into NVIDIA 3 years ago, CrowdStrike 3 years ago, or did you just get into them recently? I think honestly, from this point, Tesla versus NVIDIA, I think, and CrowdStrike, I think Tesla has the most room to better return against both those names. However, a lot riskier because it's still, at the end of the day, a narrative story. We're creating a story for Tesla. We're not seeing the proof yet in the fundamentals. Where NVIDIA and CrowdStrike, we found the proof. They're clearly winners. Winners, let them keep running. Tesla, Austin and I have a thesis. We haven't seen the proof of it yet, but essentially that's where the alpha is created. When once you get that proof in the earnings that, that was the inflection point, the thesis is validated, it probably ran already. So that's why it's like, depends on what kind of speculative risk you want to be on. I advise not to sell NVIDIA or CrowdStrike for Tesla, because there is a chance NVIDIA continues their party towards like 150, 160 in the near term. CrowdStrike just got on the S&P. Their chart is freaking bullish, and the clear tier 1 cybersecurity name. That theme will not die. So a stupid amount of code is going to be generated from AI. What do you have to do with that code? You need to protect it. Cybersecurity is the stickiest component of any IT budget. That will never go away. And NVIDIA's presence in GPU space and the king of the digital economy, like that won't go anywhere.
Right.
So like again, like it's tough to tell you to if I would sell my clear winners for this like speculative bet, because I know Tesla or big time bulls. It's still a speculative bet because we haven't gotten proof of our thesis being validated. So I'd be cautious, but again, like sell some calls maybe on Nvidia and CrowdStrike. Like sell some 450 calls on CrowdStrike for January 2025. Maybe that's a good way of like raising some capital, and like Tesla, you can reinvest in Tesla or whatnot.
Yeah.
Like it's so many factors.
It is, and you're spot on. So to take his example and give you what it looks like in real life, I had the NVIDIA. So when NVIDIA, I'll show you on the chart. When NVIDIA was trading at 160, right? I was buying the farm on this, right? So, and this is pre-split. So let me find the date and time.
We can't see your screen yet, or the chart.
All right,
perfect.
So we don't need to see it real big. So right around here, between August and October of 2022, this is when we were loading the boat on NVIDIA. Like, it doesn't matter about the price. You can just see what happened with the chart, right? So it's 10x from there. I bought the 250 calls, right? And this was 10 to 1. So I basically bought $25 calls at this time. Okay. And obviously here's 25 bucks. Here's where we're at now. So I was up 2,400% in those calls. I didn't want to sell them because I wanted to exercise them so I could have the shares, right? But to Shai's point, I had a lot of money locked up in that, and I didn't like just let it sit. So what did I do? I sold the 260 calls. Every time I thought we topped out a little bit, I sold the 260 calls, and this is a little dangerous, but take it for what's worth. I would sell the 260, and that put tens of thousands of dollars in my account, right? Because these had gone from I had like a and I still am punching myself for this. I think I only had maybe $1,200 in the trade overall, which turned to $100,000, by the way. And so you can make life-changing money with the right trades. It's true. And so I would put 30, 40 grand in my pocket to trade with, right? Every time I would sell that call. Now, if it kept running, then I'm losing money on that call. I'm not making money on the long, but I'm losing money on the short. But I would use that to trade shorter term, right? As long as the amount of money I was going to make in that shorter term trade was greater than the amount I would lose on that NVIDIA short. So in short, okay, pun intended, I was borrowing money against my NVIDIA position as collateral, much like you could do with the house. I would never, ever do that for my house, but it's the same principle. That basically my brokerage was giving me a loan against my NVIDIA position to then go trade these other names. And I made 15 grand on one of those trades while my hedge on NVIDIA lost like $1,800. I was still up 12, 13 grand, new money, fresh profit. So I bought back that call, and it is what it is. So that's the point, guys, is that
it's financial engineering.
Yeah, you got to understand the leverage, and like we don't have the time to go into that. And I get that it's complicated, but the point is this: what he's telling you is this: if you are up a couple 100% in these, and you are in the same thinking as us, is like there's still more upside here, and you don't want to lose that. Finding a way to sell covered calls, like again, he told you on CrowdStrike. Let's look at that chart. That was, I think, a really good idea. Is like right now it's trading at 390. Long-term target we gave you when it was trading around 320 was about 426, right? So if you sell the 450 calls, right, you have good odds that it's going to hit 425 and then sell off a little bit. It might never even get there. If it never gets there, you keep that money. It's yours forever. If it does hit that $450 strike price, basically what happens is you've already agreed to sell your shares at $450 a share. So you're making stupid money, right? But you also get to borrow some money in the meantime to trade. That's the point. So
to also add to that, like CrowdStrike, I've been saying tier 1 cybersecurity name. Like my thesis, they're going to be all-in-one cybersecurity platform for enterprises end of this decade. Every quarter, I gain validated. However, there is a 40 to 50% premium now that CrowdStrike has against their cybersecurity comps. Clearly, the market's saying that this is the tier 1. We're pricing you with a premium valuation of 40 to 50%. I think it consolidates around here. That's why I'm like, I wouldn't trim. I would take advantage of that like consolidation, get the IV juice be squeezed out, sell those 450 calls.
This is when they start to recapitalize. They service their debt because everybody says, hey, we believe in you. It's like, all right, cool. I can do the riskier things that get us back more of the company and less leverage because there's more belief. So it's a good point. So let's make this actionable. What sector or industry would you say you're staying away from right now that you would be a sell in your opinion if you were looking to grow your Tesla position? Like what sectors or industries would you sell at this moment?
CRMs, Klaviyo's, Monday.com's, Asana's. I mean, Salesforce is cheap, but like I don't know what ceiling Salesforce has. Like I think they'll figure it out. Einstein's a really interesting product for AI, but like CRMs will be disrupted from AI. 100%. Customer relation, like just that's a very easy product to duplicate that you can infuse into your current suite of products. So like I'd be worried about those. DevOps tools like GitLab. I love GitLab, but it essentially AI helps you create a code way easier than before. And GitLab's business is second tier to GitHub. GitHub owns everything, and GitHub is owned by Microsoft, but Copilot is king. So essentially, Microsoft can infuse GitHub with Copilot, which they're doing right now. And where's GitLab in that? I don't know. Same with JFrog. There's a lot of DevOps tools. Like, I mean, this is what I made this post over the weekend. Like, now is a time where you can't just trust the traditional metrics, the ARR, the dollar-based net retention, the free cash flow market, revenue growth, like all these stuff. Like, that's not good enough. You have to dig in. You have to see what can't be duplicated, what code can't be duplicated, who actually has a moat where there's no way nobody can like replicate this because they have a clear moat. That's why I'm being very selective of which software names I'm investing in. And those are the kind of methodology you need to think about of like, there's a highly competitive industry. There's a highly competitive niche within this industry that I feel like there's a lot of competition. It can be easily duplicated. I'm just going to sell because put it in the box of too hard to understand of AI disruption type thing. So I think fintech is not a place to be. I think that's an industry that's highly competitive.
Been inflated for the last 3 years.
Yeah.
Anything fintech like right after COVID is like, oh yeah, we just 100x. Oh, no sales? Don't even give a shit. Let's just do this. This makes sense. You guys have 1,100 users? Like, dude, I can't even tell you. So a very large company that we all know and love basically made an offer to buy me like 2021. It rhymes with Schmuck Schmitz. And basically they were paying egregious multiples for audience on paid subscription products, right? Like egregious. Then I came in, and at the time, I think we were like, if we weren't the biggest, we were of the biggest, right? So we were like we'd been doing, we scaled, right? So these companies that were not at scale, they were paying them like a ridiculous multiple. Then they bring in a company at scale, and they wanted to pay less of a multiple. That's how rational that shit was.
Damn. That's
you get what I'm saying? That makes no sense. And like the deal was bullshit. Like it was great for 2 years, and then I get like nothing. Stupid, not doing it. And I don't honestly fuck them. I'll make the money. I don't really care. You pay unless you're offering me 50 million, which they weren't, obviously. I don't give a shit. Like $2 million, I'll figure out a way to make it either way. Like you're not taking my future earning potential away, and the thing I love to do. It's nonsense. But that goes, I think to me, that's like a case in point example of like just how crazy it was for a no-name, basically influencer account. They were willing to pay an exceptional multiple on a very small audience versus in a company at scale with much larger audience. They were basically trying to beat us down and knock us down when the idea was that we would basically build a program for them. Like, how do we bring these private trading rooms to us is basically what they're asking. And we'd get a stake in those profits if we help build. It's like, dude, so build you my business and you give me like a penny for it? Fuck you. It's the stupidest thing I've ever heard.
That's the thing. Like the only moat that these fintech companies have is eyeballs. That's the only moat. And essentially eyeballs, the take rate is the only metric you need to know for fintech companies. If you have a lot of eyeballs, you can kind of play some financial engineering on the take rate, like do some pricing stuff. Like there's a lot of flexibility. So you saw that firsthand, Austin, like right there. Like they just want eyeballs. That's all it is for them.
That was nonsense,
yeah.
dude. So anyway, moving on. Snowflake. Oops. Get out of here. Yep. We're seeing a little bit of something here. I like this. Guys, remember we outlined on the last stream like a more of an absolute local bottom at $108. So that's kind of like if we sell here, we're selling to there, and that's where it's like let's leverage, create some capital, and let's make this happen. I don't think we're going to see it after today, personally. Volume isn't where I want it to be, but I just feel like the market's going to abide by this long-term support that we've had since May 2022. And I don't know. I feel like this was too much. You guys got to remember, everything, it acts rationally and then it corrects. I don't think it's going. I mean, what are your thoughts looking at how we've priced in today?
So today was a great. Today was the first day since May 22nd that we had an above average green daily candle on Snowflake.
Yep.
So a month almost went by. Clear. I think we have a near-term bottom. There's massive volume shelf. If you look at the 125 range, 128, like there's a range there that we're bottoming out, and we beat the 130. Again, we don't have blue skies ahead until we clear 165. However, I do think a near-term bottom might be in because valuation is getting really stupid cheap against their other growth comps. And some reason it didn't move as much as it should have. But last week, that breach that for weeks that people were like spreading FUD over on Snowflake, like they said to close the case. They implemented certain things that going forward, it wasn't a network breach. That's the big thing I want to go over. Like it wasn't a network breach because that's a massive issue. You'd have to do a filing
and could be more permanent, have residual effects, etc.
Yeah. So the only issue is like they didn't make their clients or customers use making me confirm that it's actually me with a text message and something else. The multi-factor MFA. Yeah, very easily. So like again, when it rains, it pours. When this breach happened, it just happened after all the drama happened the past month or so. Either way, I was freaking pounding table, adding. And I'm not saying that the worst is over. Who knows? But enjoy today. Like today was a day that we haven't seen in a while. Just for today. I don't think we might hit 111, 112, 110. Like that's the range. I think that's our next bottom. But again, like I don't think we get there because clearly today we saw the appetite. There's appetite out there for these lagging high quality growth names because they all got bought up with volume today. Yep. Tesla, Palantir, Snowflake, like there's appetite for these high quality growth names. Like I think that if the indices are going to consolidate, there's no volume on the indices. Like you saw SPY was like 60% of average volume. Like that was, and QQQ was up a ton. Like both those indices were up a ton with low volume, but the volume was under the hood on these names. So I do think maybe they catch a bid. Something to monitor for sure. But again, you're not too late to add this name. Don't think that at a 5% move off the bottoms. Now, oh wow, it's running. I'm gonna wait till it pulls back. Guess what? It's down 35% for the year. That doesn't happen to these high quality names.
No,
it doesn't. And there's a clear correlation with the 10-year yield and software names. 10-year yield goes up, software name valuations go down. Guess what's going to happen once rates get cut? The 10-year yield is going to go lower. All these growth multiples are going to start expanding, not for earnings basis, nothing about fundamentals, just because the 10-year is going lower. That's just a correlation. So I think maybe today was more of a risk on bets that we might get a rate cut in July. I don't think we will. We might. We for sure will in September. So the market is a forward-looking mechanism. Maybe they want to kind of catch these high-quality lagging growth names as a bet for that. So that's what I think might have happened today. But love to see it. I needed. I was happy. I was happy for sure.
I am too, and I think you made a good point that look, you guys, like sometimes the market overindulges on like recency and news. So what that means is it'll oversell something that wasn't as big of a deal as it seemed, but was scary, making a mountain out of a molehill. But again, being that it is a forward-looking mechanism, you have to catch those opportunities. That's saying, hey, we overcorrected right here, right now, but we're still on track for what we thought was going to happen when this was priced in at 200 a share.
Yeah.
That's kind of the point here, you guys. It's how simple this can be. If a year ago the business was valued at this and was expected to grow to this, and none of that has changed. In some cases, hey, actually, we revised up. We're actually going to do a little better than we thought. But the market's trading it at 50% discount to that. The only reason you're not buying it is because you're scared that the market is telling you that this is the future, even though what the market's telling you is this is right now. And we're going to shake you out so that we can actually, we know this. I mean, dude, neither Shai nor myself or really any of you have like a team of 30 suits running models on these companies 24/7 at your beck and call that are delivering you with your coffee reassurance backed by data that we're still on the right pace. So they'll waste $2 to $3 million pounding this down in price to scare the shit out of you so that you sell the 50 shares you had so that they can buy them at a 40%. Because in their heads, they're not thinking here and now. They're thinking next year, this is 40%. We're buying these at a 40% off price because we'll sit till next year. So they're screwing you now so they can get rich later. It's just not a good game to play, man.
Oh, 100% agree with you. Like, and I think that's why you're also seeing the spread of FUD of like software is dead. Clearly, like if you know, like I'll restate it. Like capital right now, the reason software is struggling right now is because capital is being, I mean, app phrases, is being diverted from like the general IT spending to investments in generative AI infrastructure, like the Azures, AWS's, Google's. So like you're seeing like what used to be spent on software is kind of being put on the sidelines to reinvest in this infrastructure because they know AI is real. It's not a fad. They kind of have to do all the not boring, like I guess boring stuff to make sure they can like kind of capitalize on this AI beam by doing these little AI investments in the infrastructure. But this shift results in a lot of delays in projects as companies like kind of grapple with the macro uncertainties, higher for longer, potential recession, like business spending isn't great right now. And rather than like reinvesting the working capital for these AI initiatives, they're going to go with something safe and just make sure they explore these AI opportunities by investing in the infrastructure, the chips, the computes, the servers. Like they make sure they have everything they need in order to kind of reinvest their working capital in AI related projects. AI related projects, that's where the software gets all their money. This lag, nobody knows when it's going to be filled. I can promise you it's going to be. My hunch is going to happen in Q4 of this year. I actually spoke with Ivana Spear today on a call.
Ivanka Trump.
Ivana Spear, like she has an ETF, a tech ETF, a great one. She also like reiterated like a lot of fear right now is AI is cannibalizing traditional software solutions. That's not the case. She's saying that after the
sidecar,
it's ridiculous. Like the AI infrastructure investment I just called out. Like she said that it takes 6 months usually for that to trickle into the software space. Around there, don't quote her, 6 to 9 months. Guess what? We're right in that time window right now. So I do think we're going to start slowly seeing like which software names will be the winner of this theme. And it's going to happen real quick. Again, I'm banking on Snowflake, MongoDB, Atlassian to be the ones kind of, not Atlassian, Datadogs, the Confluence, really see it right away. And we'll get there. But I can promise you guys, software is not going anywhere. There's going to be a select few that will be winners, but those winners are going to be like mega cap winners because it's going to be a massive consolidation in the industry. And once you actually win it, they're going to charge unprecedented pricing power and you're going to see it. And the consumption model that they have is pay as you go. Well, guess what? Nobody knows the ceiling of AI. It's the early innings. All they know is it's freaking powerful. And who knows what the ceiling is. So again, I'm adding, and I do think Q4 will be the inflection point we see in the earnings. But forward-looking mechanism, I think you're going to see some bids on software names before that happens.
Agreed, man. I think we're on the right track. So as I said just a minute ago, let's talk about it, dude. What do you got for us? I'm very interested to hear this myself, given that I do have a position here, options and equity. This chart is begging for more, in my opinion. There's significant buying here. So tell me share with us the great news.
All right. So as you guys know, I've been a big bull of DigitalOcean for quite some time. Cost basis in the low 20s. They're the only pure cloud computing play in the market. AWS, Azure, Google Cloud, they're all infused into their parent company. So you don't really know the fundamentals or the actual specifics of the cloud computing component. DigitalOcean is the only pure cloud computing company in the market. Their bread and butter is SMBs. There's no secret that SMBs are struggling right now. And they take the longest to kind of recover from any business spending recession or tech recession. So right now, I'm saying like, all right, clearly infrastructure is a hot potato game of the pricing needle. Not pricing, that they're experiencing a lot of momentum right now in the most recent earnings cycle. We didn't see in DigitalOcean, but we will, because again, that lag of SMBs recovering, that takes longer, but it's going to happen. And I'm underwriting a second half strong in performance. Regardless, DigitalOcean hired a new CTO today. Guess who they poached this guy from? He was the senior VP of the AWS division. So again, the cloud computing component of Amazon. And he was in charge of the AI, machine learning, and data infrastructure initiatives in AWS. Read between the lines. He would not leave that cushy job with that kind of pay with the lead. Like AWS is the leader of the cloud computing space for the CTO role in DigitalOcean, unless he knows how sticky of the product that will be. And SMBs, I say like the bread and butter is SMBs. SMBs are going to be changing in the next couple of years. They're not going to be organizations of 25 plus. It's going to be me using AI to create this new code for this new software. And I don't want to pay AWS computing fees or Azure computing fees because they're way too expensive. I'm only one person, but I create this software and code using AI that I think is like, whoa, this could be, I can make bank off this, revolutionary. I'm going to go for DigitalOcean. It's way more cheap, but the quality's still there. And it's got a developer type of environment where I can talk to, they have millions of developers using the product where I can like talk to other developers who are in a similar boat as me, who create this company or software by themselves. And we can like network, link up or whatnot. So like the amount of SMBs that will be generated from AI in the next couple of years is going to be wild and very underappreciated. And DigitalOcean, that's the bread and butter for DigitalOcean. So I think this new CTO maybe has that same kind of methodology or vision of like SMBs are going to be where you make them like a lot of money in the next couple of years or next decade. And the big dogs don't care enough, or maybe DigitalOcean just has such a good reputation in that specific developer community that's not worth the fight. Regardless, huge win. Guess where he was before? He was a senior VP of AWS. He was the VP of software infrastructure for NVIDIA. So you're telling me the new CTO of this less than $5 billion pure cloud computing play in the market came from AWS and NVIDIA, both VP positions. It doesn't get better than that. Huge win. And I think that's just a massive win for the maybe validating the company, maybe the vision they have as a real AI player. Regardless, like it doesn't get a pickup because it's a CTO. It doesn't move the needle like a CEO or maybe even CFO. But either way, massive win. And I think this is the beginning of maybe a mini monster that turns into like these SMBs or like stay loyal with their services and turn to mid caps and large caps. Who knows? All I know is I think right now the analysts on the street are estimating this is going to be like a low to mid-teen growth for the next 4 years. I'm underwriting 20+% growth with 20+% free cash flow margins that they already have. So they're a rule of 40 score. And once they hit the rule of 40 score, they deserve a premium. And right now they're trading at 18 times EBITDA multiple. That's dirt freaking cheap. If they qualify for the rule of 40 score, they're going to have a 45 to 50 plus EBITDA multiple. And that's why I gave a $75 target on DigitalOcean, because I think it's going to qualify for that soon. And once it does, it's going to fly up, because as if you guys, all you techies know, compute is where a lot of the money is going to be made in this AI space. It's not just the hardware, it's the compute elements. And there isn't just 3 players, there is a 4th, and DigitalOcean will be talked about a lot more in the next couple of years and deserves respect, especially with this new CTO jumping on board.
Couldn't agree more. Sorry, I was being the producer, getting this running while you're talking. I really like doing that. It makes it a lot better. But that news, I mean, dude, striking, shocking, amazing. I mean, you can't look in running a business. I'll tell you this: you're as good as the people that you can bring in to support the mission. And honestly, they're going to make you 100 times better. As like a founder and a CEO, I think I'm founder and CEO of like 4 different things. I am the initial growth engine, but then I actually become kind of the opposite. I feel like I am the thing that holds us back at times because it's your baby, right? So when they bring in someone with this kind of experience of companies that have achieved, in my opinion, like some of the most unprecedented and impressive scale anyone has, both at Amazon with AWS and then NVIDIA, I don't know how you don't look at that as a pretty significant deal. Especially when the whole idea is that, look, we're a tech company. Do you know what I'm saying? Like we are a tech company that has a product. The guy's literally coming in to manage only those 2 elements. Yeah, as Manster says, someone who also has software experience and has been very successful. It's from a guy right here who I know has done it himself. The right people on the bus, man. It's interesting, man. I really think that this is going to materialize to be a winner. Obviously, as you indicated, there is risk here, and that like you need small business rebound before this becomes a thing. But also, you got to understand that like I think capitalization of internet services and small business is still on the low end as far as like traditional small SMBs, right? Like you have a ton of new SMBs that I feel like aren't even registering on the map right now. That's the like solopreneur type of deals where you've got people raking in $1 million a year. I mean, you guys think about that for a second. That's an impressive business because typically those are in the solopreneur spaces. They're running at a pretty decent margin of 70 to 80%. So when they're bringing in, unless they're selling like hard products and you're talking gross sales, but in most like digital services, software, digital product space, guys, if they're generating $1 million in most cases, they're taking home 750 grand. So keep that in mind, especially if they've scaled their products efficiently. There's opportunity. And the whole thing here is like, what companies can we find that are going to capitalize on growth in other business sectors? I think this is one of them personally. So I am personally loaded on the $50 calls already. I've posted those in the Discord. The link's at the bottom if you want to get in and get the exact options trades that we're talking about here. We outline exactly when we're buying, when we're selling, what our targets are, the exact contract details, and kind of what we're looking at. But yeah, I think it's very, very interesting, and I want to say that this was a great pick, dude. You brought up this was your baby. You found this. I never even heard of it until you mentioned it. So
shit, really? Love it. Nice.
Yeah, dude. I never some of these kind of the I would say not small cap, but I guess more of the mid cap growth stuff that you've brought up. I mean, I have not ever even heard of some of them. Jamia was one that I had heard of because I traded this when it ran, but I didn't understand the full scope of what we had in front of us, and like. So again, just an update so you guys know, because you've seen us talk about this a lot. We are up 105% from the trade alert that we put out on this. So do not chase it now. Do not. There's other opportunities, especially if you're new. If you're seasoned and skilled and you know how to manage a position, by all means, be my guest. But we've already nailed this one out of the park. So I guess let's keep it moving here. One that I wanted to get your opinion on, actually, is Mr. Palantir. We're seeing a pretty damn good week this week. Pretty damn good month. I mean, they've had a phenomenal year if we track back to May. I mean, so guys, the buy on this one was given out in the 7s and 8s. Clearly we're up, 250, 300% here. So keep that in mind. But I think what's important here to look at on this chart is just slow, steady growth, walking up the chain. You got to love a beautiful cup and handle when you see it, especially when you're looking at the monthly chart. Growth potential here. Our targets were 1690, 21 and change, and then 26. All 3 have been hit. So I think we're going to have to outline some new targets here. So let's start the best way we always should. Let's get a little fib retracement off the bottom. Where is our golden mean? So there it is, $30 right there, version to the golden mean. Anytime we push up, sell down, you want to see price will rebound to its golden mean. Look at it like a rubber band, right? Now, what happens after that is really critical. If it does not explode over $30, then expect longer term consolidation. The business is going to grow, the model makes sense, but we got to also remember what the targets are for those of you that are short term trading. I mean, what are you thinking about what you're seeing with Palantir right now?
Yeah, so Palantir is at a very interesting point. So if you guys don't know what Palantir is, essentially it's big data analytics. That's a vague comment. So why is AI such a tailwind for Palantir? So Palantir has a first mover advantage of AI. If you guys don't know Karp, the CEO founder, like he believed in AI over a decade ago and created this new like Palantir from that essentially. And he knew AI was going to be the reality of the future. So because of that, he has a first mover advantage. And Palantir, like essentially, let me try phrasing it away because it's really complex. So, like as enterprises increasingly depend on AI to make these like informed decisions on whatever they want to do as an organization, the need for sophisticated data integration and analytics become absolutely vital. Like you can't afford not to have it. And Palantir's Gotham and Foundry are essentially going to become indispensable tools for organizations. Like you need these platforms to integrate the data from all these various sources and deliver some kind of analytics to make these informed big time decisions. And the use cases of Palantir is absolutely proven already. Like there's an endless amount of clients who like show like, wow, like we used Palantir products and we've saved millions of dollars in a couple of years. So the biggest issue with Palantir was always, all right, we know the government this is the government's best friend. Like Palantir was always labeled as the black box consultant for the US government, but can they ever actually make it in the commercial space? Because it's such a black box, and the thesis of like they might become the operating system for a lot of enterprises became so like out there that there's no way. That feels very Terminator-esque because their product and technology is very Terminator-esque. Like they give you a lot of insights, digesting a ton of sophisticated data in order to do so. But like, wow, they actually allow enterprises to save a ton of money. So their clear inflection point for Palantir was a year ago almost now with the AIP, the AI platform that essentially was Palantir's plan to kind of get into the commercial space because they know like in order for them to be a mega cap or $100+ billion company, they need that commercial side of the business because the government side, like, who knows when the government deals come through? Like it's so unpredictable. They need some kind of recurring revenues, like some predictable revenue on the commercial side in order to become that major presence in the AI space. So the AIP was a major inflection point. 2 quarters ago, we saw, 70% year-over-year growth on the commercial clients. Like that was the inflection point. That's why the stock ran so much to close to $30 based off that. Like, okay, because the way Palantir's product works, it's sticky. Like once you adopt it into your enterprise, you're not leaving it. Like it's a highly scalable business model. So if it's having that inflection point and start getting rapidly adopted, this is going to be turning into a massive grower. Like it was like a $20 billion company at the time. Now I want to say it's like 40-ish probably billion, but I'm underwriting like this can be a mega cap company one day. So the issue why it's consolidating or not breaking out anymore because this most recent earnings cycle, like I always correlated, all right, commercial clients are growing. That's essentially a precursor of top line growth going to be bumping up as well because right now they're only growing 20% on the top line with with really juicy like 28% free cash flow margins, but top line's only 20%. And management has also guided like this should be a 25% CAGR company. We haven't gone there yet. And I thought the commercial clients would be like, all right, that was an inflection point. We're going to see a top line bump. We haven't gone that yet. They haven't really commented on why that is. My thesis is it's a heavy CapEx. Like it's a big time upfront cost for enterprise to adopt Palantir's product to adopt their product. And because of that, it requires a lot of green light or signatures from a lot of C-suite people. Or also, I know from like evidence from my channel checks that, and anecdotal evidence that a lot of enterprises aren't investing their working capital right now. Like they're waiting for the Fed to cut interest rates to make sure that higher for longer narrative won't be there. We're going to have a beginning of a new cycle of rate cuts. And when that happens, they don't have to worry about any kind of rate increase or any kind of dry powder on the sidelines in case the higher for longer narrative goes into 2026, 2025. They think the worst is behind them. As soon as we get the rate cut, 10-year yield goes lower. I think a lot of C-suites are going to feel comfortable investing their working capital into investments like the Palantir, where near-term cost is like a ton, like millions and millions of dollars, but long-term, you're going to save a ton of money. But a lot of C-suite don't want to swallow that immediate bump of that CapEx because there's still a worry on the macro scale and business spending because the Feds are keeping their rates higher for longer. So I think once the rate cuts happen, which again, July, September are very close, I do think you're seeing the commercial clients adopting Palantir, like entering, like that's why clients are going higher, but they're not like really going all out in investment yet because they're waiting for that first rate cut. That's my thesis on the company. And also, once that happens, like I do think if this turns into a 25% top line grower with that 28% free cash flow margin, it turns into a unicorn status like CrowdStrike, where CrowdStrike scores a 60 plus score on Rule of 40. Palantir can start itching towards that. And like I said, CrowdStrike's really expensive right now. Palantir is fair. For them to turn really expensive, that's like a $45, $50 stock. And again, it's going to freaking fly because it's still in the early innings of adoption in the enterprise space. And once it starts scaling, it's gain momentum, like it's going to shoot up. So right now it's a 7% position for me. Like I got in below $10. I made my first purchase in a year and a half, like a month ago. I have 800 shares. I'm pausing just until I see that like inflection quarter of like, all right, we're actually seeing a top line revenue being bumped up to like closer to 25%. Once that happens, I'm adding quickly because this name is going to fly.
I love it. I couldn't agree more. I think this is a bottom feeder that was sitting there. I mean, just to go back to that chart, I mean, look at that little accumulation station you got, man. I mean, you can't beat that. And then to see this kind of growth in the chart, that coincides with, I guess, really the value prop of the business. I think you got a no-brainer winner there. Yeah, nailed it. All right, guys, let's get into it. Drop your tickers. We'll play a little smash or pass. You bring up a ticker. We'll tell you whether or not it's trash or opportunity. We like to keep it quick. One ticker per comments. We can put up on the screen, but feel free to drop quite a few. We'll get into these. Sorry, we went a little into some of the names we were already talking about, but I feel like it was well worth it just to give you guys the full scope. First one up, my man Cools, AMD. Let's take a little peek, ski-poo, on this one. Sympathy runner to NVIDIA chart setting up decently, but did break top scale trend support. And I think we'll be heading back down to 140. How do you like this from the fundamental side?
I am at a loss with AMD. It's like such a polarizing position psychologically for me because I got a 2% position. I downgraded it to a starter, which is 1%. Right now, I need AMD to be in a prove-it mode. I think it's telling that they're not going up as much as they should be with semiconductors is raging, NVIDIA raging. It should be a high tide raises all boats in the GPU space type of thing. AMD's not catching a bid. People don't believe in their story in the near term is going to get any kind of meaningful bump from this AI race or AI race within GPUs, or NVIDIA has such a chokehold on the whole space that like it might take years for AMD to even get a seat at the table, which I think, first off, like I do think AMD is going to get a seat at the table. Absolutely. But the rapid innovation NVIDIA is doing with the Blackwell chip and then the one, I forgot the name, the more recent one on top of the Blackwell in 2026, like they're not giving AMD a chance to sit at the table at all. Like, they're constantly innovating like rapidly within a year. And I do think if their estimates are true, or I'll pull it up, if they do grow, I just don't like right now the estimates are in place where they're going to grow 28% in 2025 with 22% free cash flow margin. What's that rule of 40 score for that? That's a 50. And a highly secular growth theme like the GPU space. Like that's like, okay, this can run. AMD has a history of not delivering on estimates. It's always been a narrative story and not like a factual story. Similar, I'm not saying similar, but like what Austin and I are talking about with Tesla right now, like we have a thesis. We're not seeing the facts yet. It's kind of the same issue with AMD. Like we have a thesis in AMD. We're not seeing it yet in the fundamentals. And a lot of the argument is like, why bother when you have a clear winner right now in NVIDIA who just constantly goes up every single day and doesn't matter like how big they are, they're going to have the pricing power needles. So, like, I think AMD, like the price action is extremely telling. I would be a little cautious. I would with SMH, which is the ETF for semiconductors, it is way overbought. Micron, Broadcom, TSM, ASML, like NVIDIA, like all these like massive kings of the digital economy. I think it's a way better way to play this theme than like maybe catching a bid on AMD, which end of the day, they're still a $250 billion company. That's not cheap for what they're making, like 25 billion this year. That's like, okay, it's not like a steal. And there's a lot of risk associated because it's still a narrative story, not like a factual story. So I wouldn't sell off because this theme has legs. It's like a 5-6 year cycle for hardware. We're in year 2. So like it's got years to go, but I almost think that there might be more money being made elsewhere in the hardware space. And that's why I'm kind of like warming up the idea to. That's why I downgraded to starter, because I'm waiting for them to prove it to me rather than me wasting my opportunity cost by betting on this not falling knife, but a story or a narrative that's
riding on the back of NVIDIA anyway.
Yeah.
I mean, they're not seeing this growth without NVIDIA leading the pack.
That's the thing. So like, why not just invest in the best? Like, yeah, NVIDIA ran over 100% this year, but just like as soon as NVIDIA gets that pullback, that the 8-day EMA or 21-day EMA, like maybe cut this and add to that name, because I think NVIDIA is still going to run. Like, it's going to run.
Yep. I couldn't be in more agreement with this. This was a good trade for me personally. I bought the breakout over 90. I think it was 99 was the cutoff point. It went to 228. I mean, come on, can't beat that. But it was a trade, no less. And again, we talked about that second tier support coming up here. God forbid it falls lower. Here's your 200-day right down there, just floating. Or wait, no, is that the 25? Either way, my point is this: you lost long-term trend support. The short-term trend support broke. You got a midline here, and then there's your long-term trend support. This one right across the bottom, which puts you at around 120 a share. So keep that in mind. Next, we've got ADSK, Qual-Amp already. I know you crushed this trade. Didn't even know they had it. I didn't even know this was publicly traded. This is the one we're talking about that's up like 800 billion% from listing.
Yeah, so this caught a bid today from an activist investing. So usually that indicates a short-term bump. That's not going to be sticky because that's not it. Autodesk has a massive presence in the CAD market, like absolutely. And I'm surprised that activists try to get in to this specific name. That's like, okay, I didn't think it was that much of a troubled company. So I don't know. I think Autodesk is interesting. I think it's I put in a too difficult to understand bucket of like, I don't know what their growth avenues will be down the line. They're not a growth company anymore, but they're not a cheap company that's got juicy. They have juicy margins, but it's not a cheap company. So I think it's that awkward gray area of like, it's not growing as much as it needs to be to justify the valuation, but it's also not as cheap or fundamentally driven juice to be squeezed. It's a weird gray area, but I'd say today's bump, it was all activist driven, which is usually a catalyst driven trade, which usually consolidates and maybe fades. It doesn't really catch legs or anything. It's nothing fundamentally driven. So right now it looks bullish. If it holds here and consolidates, maybe, but it's a catch-22 because once an activist comes in, there is a ceiling on the stock. Like it won't go up as much as it needs. If there's some kind of fundamental driven catalyst, like it won't go up that much because there's an activist presence in there, and all the energy from the management is going towards fighting this activist and not really in the business as much as they should be. So that's why it's such a catch-22. Near term, it's going to get a bump, but you're distracting all the C-suites on this activist investing, and you have to fight off this like this pest, and like it's annoying long term. So that's my 2 cents on it. It's too difficult to understand, Bucket, but it got bumped today from the activist.
Good question, Porter. I guess, well, we can't not, dude. We have like, Porter, what were the numbers on how many successful weeks we had out of the year of like 100% or more trade on the SPY? It was something crazy, wasn't it?
I mean, listen, guys, the SPY is way overbought right now.
Yep.
Like it's, if you guys don't know the RSI, Relative Strength Index, anything above a 70 indicates overbought and usually pulls back to the mean or consolidates. Right now it's a 77. That means like, I'm not saying it's 10% overbought. There's going to be a 10% correction, but these kind of moves on low volume days of just trending up to the right, the RSI increasing, that leads to a rug pull. And especially on an quad witching week, which we have this week.
Do you want to pull your chart up, show the volume shelf as well, just kind of give a clearer picture? Because I think that would be helpful.
Oh, shit. What was that? All right. Can you see my screen, Oz?
Yeah. Yep.
All right. So right here, you can see RSI is a 77. Anytime it breaches the blue and goes into the white, it's overbought. Usually, all right, the market's going to either retrace or it's going to consolidate. So right now, it's way overbought. It's a 77. Last time this happened, what happened? It was December. And look, it consolidated as, look what, this is a perfect example. It went to 77. It didn't pull back, but it consolidated for what? December 14th all the way to for a month. And during that month, this RSI went from 77 to the mean 54. So that's totally fine. This might not deserve a pullback, but this is why I'm saying that I think this summer the indices are just going to consolidate because the RSI is clearly overbought. It might not pull back because there's no volume follow through or the bears. There's no catalyst to drive the bears to come to the market and push the market down. But I think it's going to consolidate until this RSI goes back to the mean. So that happened over here. And last time it happened in June 2023. And right here, it went from 442 to 428. So it did have that 3% correction. And if you want to go on the weekly chart, it has the same story. Let's put the volume chef right here because a lot of new buyers came. Anyway, so right here, like it's 74 in the weekly chart. What happened last time it hit over 70? Right here, we had that April dip. So last time it went overbought, we corrected 5%. When was the last time here? I don't count these because it was slightly over. Oh, right here. Pre-COVID. So clearly this was a catalyst-driven pullback. So I wouldn't count this as a case study. Let's do before that. Right here, 2018. It went from way overextended. Actually, I mean, this was stupid. 92. Wow.
Yep.
And it pulled back from 281 down to 255, which is, wow, it was a 5% correction, but it went back to the mean. Like it always returns back to the mean is the end of the story. Like 10,000 foot view, what you guys get from it. Always, no matter what. It's a proven concept. You can go back 10 years. I don't care. Like anytime, 10 years. Yeah. Anytime it breaches the blue, it always reverts back to the mean, either in consolidation or a pullback. Right now, we're at that point. We're entering a seasonal weakness period of the indices in the summer where like the low volume. I think we consolidate here. I don't think we pull back. I just don't think the move is made in the Mag 5 names anymore because of this. Like the Mag 5 and Mag 7, they move these indices. And NVIDIA's
they carry them on their back.
NVIDIA, QQQ is up 20% this year. NVIDIA's move is 40% of that. NVIDIA is essentially driving the market right now. And I think the like those names who have been carrying this market, they just consolidate this summer. While the high quality growth names who've been lagging, they catch the bid because that's where the alpha is made in the near term. So I think All right. Well, I wouldn't for the options. Going back to the options, like I wouldn't do any calls. I'd sell some calls. I think maybe psychologically we're so close to the 550 level. We hit it. I could see us retracing once we hit that and consolidate. Because
Yeah.
look at this volume. There's nothing above 475. That's dangerous in my opinion. Like we are quite extended on from our 200-day moving average. We're 11% away from our 200-day moving average. That's extended.
I think
What's our
560, just a simple fib retracement of that last little downturn, that little kick down from what is that, 2023? What is that, September, October ish? Right there. Yep. Go right.
Oh, right
A little
here.
bit right there. Yeah. If you just look at that kick down, right? Test of the moving average, that's good. But just based off that move, that puts us at like a full retracement. It's like an extension, sorry, it's going to 560. Then we come back down, as he said, and we consolidate 530s, I think, realistically. So if you see 558, 560 on the tape, I think a trade I would take is 6 months out, 530 puts. And I think those will pay handsomely. $30 downswing, you'll make over 100% on those. Those will pay handsomely. So as far as the SPY goes in the short term, I don't even want to mess with it. There's too much uncertainty personally. Like we were trading this when we had clear and identifiable ranges all day, every day. We don't have that. It would be irresponsible. There's other opportunities that are more predictable than this. So I would say everyone should write that down, notebook, wherever you're tracking this shit. 558 to 560, that's really your opportunity to trade some downside to 530, I think. And I would go 6 months out, and that's it. But as of right now, you should have fear of upside just so much as you should have fear of downside. But I would say it's equivalent. So taking anything would just be ill-advised. That volume is terrible.
I was just, oh my God, it's getting worse and worse. I know we're getting summer months, but like this V-shaped recovery, that was not validated with volume.
We should have consolidated.
Yeah.
That's nonsense.
We're going to consolidate, which is fine, guys. Like we're up so much this year in the market. Like it's like you can't go up 2% a month. Like you just can't. That's just not, that's a bubble. Like you need some kind of pullback. And I know the argument of like, there is an other side of this. Like Austin and I keep saying like volume, like we need some kind of a follow through to prove like a trend. There also could be the argument that if there's no volume in the market, that means a lot of the people on the head, like Stock Talk mentioned this today, actually, where a lot of the hedge funds might be offsides on the move because there's no volume in the market. There's on the sidelines waiting maybe for that pullback, or they're taking that 5.2% return on the bond or yields, whatnot. But there could be an argument that, all right, well, they're offsides. And once they get back in the market, we could get the next leg in the rally. Fine. That could be the case. Again, volume will indicate once that happens. If we get volume in the markets as we breach 550, different story. I don't care about the RSI. Volume will push the market higher. And like that, the RSI thesis is just a tool for my decision making. It's not end all be all. It's just an insight I'm using to kind of answer Porter's question, like what's a good weekly position? And that combined with the breadth wasn't great today, and indices felt a little laggy. Big sell-off at the end of the day with low volume. It feels like a rug pull it's inevitable. Like I think we're gonna have a really bloody day one day in the next month, like a 2% down day, and then once that happens, RSI gets drained back to the mean. People will have that sense of fear again, like, oh, it's like we're getting some pushback, and that's fine. Like we need it. It's been like, I forgot what the statistic was, but like we're way past a 2% pull day. Like we need one bloody day. We just need one.
We do. And so there it is. Let's I want to keep moving because we got one or two more we're going to cover here. And just to kind of finalize on what he's talking about here. If you break SPY into like 3-month intervals, sorry, let's go to SPX. I don't have as much stuff on the chart. I don't want to delete them because when we do get back there, this is a cleaner version of what we identified. So we were buyers at 2,400, so 240. We were buyers at 3,600. And then our targets were 460 and 52. So the trade was there. We gave it to you. We nailed it, right? The V-shaped recovery, talked about that bounce, 360s. We bought it. As far as where we go, if you look at this on like consolidated in a 6-month view, this gives you a much different picture. Slow, consistent, steady growth, explosive growth that needs to be accounted for. And we're talking Guys, this isn't about post-COVID. We're talking dating back to post-mortgage crisis. We're still reeling the effects of that ridiculous move to the upside. And you got boomers, which this is like my little, I don't know if we call it conspiracy or whatever. Boomers are suffering from so much FOMO, and I would argue that they're the majority of the retail money in the market, right? And they're suffering from a FOMO, an ironic FOMO, because they did get the move, right? But they're so nitpicky, greedy, and annoying that they don't want to sell anything. They just don't want to sell. I think we're in a weird potential for a weird squeeze that I think even institutions are a little nervous about, because at the end of the day, it's up to the client to pull or move their funds somewhere else. And I feel like the boomers are so stuck to this idea that we just need to like track the SPY, like just buy me VOO. Like they're so glued to this idea, the Microsofts, the Apples, they'll never sell. And like, to be fair, my dad was buying Apple in like the early 2000s, late 90s. And like, I don't even want to know what his cost basis is. It's stupid. It's stupid. Why would he sell it? Nothing's changed. The business has just continued. So again, think about that with some of these core businesses that are driving this growth. The businesses are still in a decent position. And a matter of fact, they're actually monopolies in some cases. Why would anyone want to sell that? They don't. So I think that there is like somewhat of a weird liquidity crisis, I feel like, which is why you see them spinning up all these new instruments. So I would keep that in mind. And so then we'll wrap up with SOFI and then ARM, because we were asked about both of those. And maybe we'll jump into Uber. So looking at the SOFI here, this one will be quick because we've talked about this many times. Like I think both of us share the same opinion. Like we just haven't seen the capitalization that we should have seen. I don't get it, but they're just not doing it. Why?
Fintech. Like what? People think this should be valued as a tech company. I think
they're a bank.
They're a bank that uses technology.
Right. But they're a bank nonetheless. They could have been a bank that leverages that technology to become a full-scale financial services provider. Like they could have basically become a bank plus PayPal plus Venmo plus Zelle, which would have been very interesting. Even plus Stripe. I think they could have done this right. They could have become all of that and more.
So the issue with SOFI SOFI had the opportunity. People call me crazy, but like Robinhood had a moat with the UI. Like user experience is a moat. People don't factor that in. Like when people come back every single day because the visuals is so easy to use. They're gamifying it, but not really. It's just the UI is gorgeous. Like that's a moat because people keep coming back.
You guys are user interface. UI user interface, meaning like what the app looks like, feels like, smells like, tastes like. Sorry, go ahead.
Yeah, so Robinhood was trading near cash value like 2 years ago. It was not like as favored as it was right now. Like there was an opportunity where like, wow, that merger could be real sexy of like SoFi's traditional bank that uses technology with the UI and the marketing of Robinhood could be like the super app for millennials, Gen Zers. They didn't take advantage of it, or Robinhood wasn't open for. Regardless, I do think Robinhood is essentially becoming what everyone hoped that SoFi would become. You're seeing that with Robinhood, and a lot of the SoFi investors are being frustrated that people aren't valuing the company as they believe they should be. B, think that Robinhood is just a meme trade because of the GameStop nonsense or whatnot. Or C, once you become so emotionally invested in the company, you kind of become blinded almost with a thesis not becoming truthful. I might be experiencing that with Unity right now, ticker U. I don't think so. I still think they have a duopoly. It's a different business, but like I still have my thesis, but I probably shouldn't be doubling my position in the past 2 months because it's a fire show. It's a shit show at a company level, but I did because I'm maybe emotionally involved. Who knows? We'll see if I'm a schmuck or a genius in a couple of years. But I think SoFi, like a lot of SoFi investors, not a lot of them are like kind of warming up to the idea of maybe this isn't what they thought it would be a couple of years ago as that tech player in the fintech, or fintech just isn't a good place to be in right now. Maybe SoFi is that tech play in the fintech space. Fine, not a bank, but if you guys aren't noticing, it's a highly competitive industry with low margins and arguably no moat because so many different companies offer similar solutions. Robinhood, they have a clear moat, their UI and user experience. Like that's a moat. Nobody can replicate that. You saw Charles Schwab, TD Ameritrade, the shit show of that merger. They couldn't figure it out. SoFi's UI on their brokerage business is garbage. So that's a moat. Robinhood has a moat. PayPal has a moat because first user advantage, they own a ton of data because of that first user advantage via Venmo that they have some optionality of what they could do with it. Like they can start doing some kind of ad platform on top of their Venmo or whatnot. And with all the data they have, they can create ads and like make some high margin business in that. That's a moat that they can leverage that. But all these payment services, they're becoming so easily replicated and so like common that it's the cheap keeps getting cheaper. And for SoFi, the tradition, let's just say it is a bank. What's the normal valuation for a bank? It's usually 1.5 times sales, price to book sales. Right now, it's getting cheaper. It's 1.7, but they've gone murdered or they've been basing for quite some time, and they still have like a 20% move or 15% move to get to the normalization of being valued a bank. So I do think this could be a really interesting trade if it breaches $6, maybe even closer to $5. So I think their book value is like maybe a high fives, a little under $6. So once it gets to that range,
too, to be honest.
So once it gets to that range, fine. It's a bank with an upside potentially being a tech play or within a bank. Fine. That I can sign off on that, but I do think the ceiling is limited. Think about that. Like it's not going to be a $15 to $20 stock in the next year or so unless they drastically change something to change the thesis that they're not a bank, which I haven't seen yet. But I think Anthony Noto is awesome, the CEO. I think he used to be a CFO of the NFL. They have great partnerships. They do
Isn't Chamath still a monster shareholder there?
Who?
Chamath?
Yeah, he is. Chamath is. It's just like,
and that's where they missed the boat because they have that mouthpiece, dude. If he could have Elon'd that shit and they became Robinhood,
I think there's a reason he didn't. He would. He would have.
So dumb.
So I just think it's getting close to that point where like I think I would add, which is in the high fives. But again, I think as a trade because banks, unless you're JP Morgan can do what SoFi is doing. Like why you don't think JP Morgan, whose CEO is the goats of that whole industry, doesn't have the vision of creating something that everyone's saying like SoFi has as moat? Like JP Morgan would do it if they see it as an ad value. They just don't. And there's a reason for that. Yep. And that's my 2 cents on it. So just I love the story of SoFi. I love the retail story. I just, as an investment, I don't see it, and I could be wrong, but that's why I don't really invest in fintech because I'm part of the camp where I don't see a moat, and why bother when my edge is in data, AI, cloud, and e-commerce.
Yep. And it's not a flex, be a douche. It's like, look, guys, we find these when it makes sense. Just in the ladder of options I have with Hood, I mean, I have equity at 8 and 12 on 2 different accounts. We're up 600 and some percent on the options. They've been up 1,000% just for shits and gigs. But we saw the capitalization coming. We saw the growth coming. We saw the discount. We took advantage. So you'll get more of these. That's my point. Don't chase. You'll get the next one because you're coming here. You're watching this. I'll post a link right now if you want to get access to these live when they come out, guys. I just dropped the link right there in the chat. Find it at the bottom. Watch that video. It's 4 minutes. It explains exactly what you actually get. Make sure you're the right fit. I don't like people coming in there when they're not ready to actually figure this out and learn. All the trades, the full education. We give you the strategy. We have a suite of tools, indicators you can use. But more importantly, if you had $1,000 you would have put in this, keep in mind you'd have 6,000 right now. So invest a little in yourself to actually do this right and make some money. So to skip over to ARM real quick before we wrap this up, this is one we were just talking about the other day, and we were just mapping out. We held pretty reasonably today. I actually really liked today's price action. Volume was light, but the close was really optimistic, I would say, for bulls on ARM. And we already identified that this white line is a critical range, right? where above it, we are extremely bullish. Below it, we are going to consolidate. We're not bearish, but we will consolidate and we will trade down. However, we stay above it. We're hitting 165. We already have, but I think we're heading back there. But more importantly, in the long term, my next target would be 205, and I'll be looking at that by fall. So that's at least from the technical breakdown. I would say, what are your thoughts on the business itself? You can give it to a quick little 2-minute deal because I know you like it.
Yeah. So ARM, if you guys don't know, every single device going forward will have some kind of processing AI processing component to it. You're seeing with the MacBook, you're seeing with the iPad, seeing the iPhone. Like this is the new beginning of this new product super cycle we're seeing. The way ARM works is they offer this like the blueprints for processors. So essentially, if you want to make a processor, you have to use ARM. Like the NVIDIAs, the Qualcomms, like all their processors, they have to use ARM first in order to get the blueprints for it. So ARM doesn't really have an IP, but you can't really create processors without them. So that's why they have a stupid moat, like a ridiculous moat within this digital economy that my thesis is like every device is going to get innovated from this AI processors. So ARM is going to get a little cut of every single new device that will get produced for who knows how long. Like it could be years and years, but it's going to be ridiculous. And this is one of the names where there's a clear moat, no competitor, and it's a sticky business. Clearly, when you have all the big players, they need you in order to even fund their initiatives or whatnot. So like, it's wild. Like it's for every dollar that ARM gets, 97 cents of that goes straight to their pocket. Dude. That's unreal. So like, I'm waiting for a pullback. There's only one bear argument I have, which my Hail Mary of any kind of pullback. SoftBank owns 90% of the floats. That's highly maybe they have the kahunas to hold because they know the digital economy and like they're going to get a cut of every product that they don't want to sell. But I could see them like trimming a third of that to 60%, which is still uber bullish. And maybe there's some near-term headwinds on them dumping stock. Who knows what? But I missed the boat on this in the 60s and 70s because I had the dumbest. That's why you shouldn't be fixated on rules in investing. Like they're an IPO. My rule of thumb is they need 2 quarterly earnings reports for me to get invested in it. So I want to see what the management style is on the call, what their numbers are going to be like. So I didn't add to ARM, but clearly this is a massive winner. It's just beginning, and it's just ARM, Micron, ASML, TSM, NVIDIA. Like those are the kings of the hardware space. Like they're the goats. There's no competition with what they do at all. And any kind of macro-driven dip we're going to get, those 5 or 6 names I just called out, they're going to have a V-shaped recovery. They're going to be bought up because they are absolutely necessary in this new digital economy. And you're seeing it today with TSM. Like TSM caught a bid today. Why? They raised their prices 5% on packaging, knowing that they have a chokehold on essentially all the equipment that they provide to the ASML and like the Arista network. Like their specific role in the digital economy, there's no competition and everyone needs to use them. Like they have to, they're forced to. And because of that, their backlog is like for a couple, like 2026, 2027. They're like, all right, well, we're going to raise prices because we know you guys will pay us because you need us. Our backlog is 3 years long, and do what you might. Like we have you, my foot is on your neck, and we're just going to raise prices because we know that you have to like submit because you want to make money on your end as well. And you need our product equipment to use that. So you're going to see, that's why TSM caught a bid. You're probably going to see ASML do similar price increase. You're going to see Micron do some pricing power increase. Like that's why it's so important to find those names who have a moat and an advantage because they can offer ridiculous pricing power. And that's why I invest in software names who are going to kind of follow the suits in like 5 or 6 years, like to this extent. Like pricing power is a massive, massive requirement for any kind of multi-bagger. And you're seeing it right now.
I couldn't agree more. And like those margins, like, I mean, you guys, that just doesn't happen.
Yeah.
It doesn't happen.
Never.
It's not real life. I don't get it personally. I don't know. The SoftBank thing spooks the living hell out of me though.
It does. That's why I mean, SoftBank new IPOs, like they're for sure gonna dump shares after the like 6 months because they're required to hold for 6 months.
Just blows my mind. Why haven't they?
Because they know that ARM's gonna get cut of every single device that's produced in the next like 5 to 7 years. Like there's no like that's a ridiculous TAM. Like who knows the how much money they're gonna bring in?
I don't know. It's madness, dude. Madness. So there you have it. Keep your wits about you. Market is blown up. We got a few good trades that are already in effect that we're working on again. I dropped the link in the chat. If you want to get in on the inside, if you want this kind of stuff daily alongside 4 independent coaches that will teach you their exact strategy, which is each a core component of the overarching strategy we're using here, you can join it, get in there, get a taste. And as always, stay posted because me and Shai have some very, very, very exciting shit in the works. You guys are going to shit yourselves and become very rich. So just say that if you use it correctly. But I love y'all. Stay blessed now. Thanks for coming. We'll see you guys on Friday.